Hi, welcome to Market in a Minute. This is where we analyze the markets looking for opportunities. We no longer think the risk in the market, and we haven't thought that way in a long time. It's no longer inflation. It's now turning to the earnings expectations. And if the economy will hold up in 2024 to realize those earnings expectations. By looking for opportunities, now we've thought this for a couple months, we see it in healthcare. It's really starting to catch hold. It's heating up. The small cap biotechnology stocks, we thought this for a while. They've been decimated and they're starting to catch fire. So the big issue in the market is changing from the inflation concern to earnings per share. And this is the inflation here. So the blue line is all items. So that's coming down to about 3.2% probably when it's reported on Thursday. And so that's well contained. The X food and energy, so it's more services, is about 4. So we'd like to see this down about 3, and the goods inflation down about 2. But we still think there's these cinders in the economy that are still hot. And if the Fed doesn't play this out very well, then inflation is going to pick up again. So the market's expecting a rate cut in March. We're concerned about that. We think those expectations are a little too aggressive. And if the Fed cuts rates like the market wants 6 times next year, we think the inflation might likely come back. So the Federal Reserve has communicated 3 rate cuts this year, likely in the back half of the year. We think that's most appropriate, but there's risk in the markets. The market wants more. And so when we get to those critical dates like in March and it doesn't occur, then there may be some weakness in the markets. The earnings expectations for 11% growth this year is too high. So we think that'll come down a little bit, or maybe come down significantly as we go through the year if the economy actually weakens. So the risk is the earnings expectations for next year, as the PE of the market is kind of high at this point. So that's what to focus on. We're right in front of earnings. We're actually starting to see some. Looking at the healthcare sector, we think this could be the big winner this year in the markets. We're watching how the market unfolds early this year to see what the leadership is. But the obesity drugs, I can't emphasize this enough, and I know we mentioned this before, but they are the catalyst for this sector. There's $100 billion of revenue opportunity over time in this sector. A lot of interesting drugs are going to come to the market. Right now, this week, this is JP Morgan Healthcare Conference Week. It's not just JP Morgan, it's a whole lot of investment banks having their conferences out in San Francisco. There's 8,000 people, investors, bankers, coming to this conference, companies. So what will happen during JP Morgan week is that there'll be deals that are maybe not finalized, but cemented at this conference. The analysts will get better expectations about the really good companies for this year. It's an exciting time. We have our analysts out there running all over the place. We think in the obesity space, the best company to buy is Viking. It has the most upside, in our opinion, of the quality names, small cap quality names in this sector. We're getting a lot of broker calls. It's kind of funny which company will be the next to be acquired. So the sector's heated up. There's a lot of interest going on in this space, and it's just starting. Here's the graph on the healthcare sector. So you can see for a couple years now, the sector's gone flat relative to the market. So the market is performing strongly. This sector has been going sideways. It's just getting ready, see that, to break out. Now, this is relative performance. So when the healthcare sector underperforms by a significant amount, it's generally followed by a very big move. So we're seeing that start to pick up, starting to break that downward trend in terms of relative performance. Then you can see over time, after the sector has underperformed for a period, how it has these very large moves. So we're in a period of sideways for a while, and it's probably likely going to have a big move. So we like this sector. There's lots of good companies to buy there, large cap and small cap. We think the small cap sector is extremely undervalued and could have a very large move in the next couple of years. So earnings reports are coming out. So we've had a couple already, and we think that in general what the companies will do is they'll start to guide down. So get the right expectation for 2024. So up 11% is probably too high. We're going to see some guide downs occur, and that'll probably set the stock market up for maybe a nice rally into potentially a slower period of advances in election year later this year. So ConAgra, this is a company that we mentioned maybe last week or week before, but it's a company we like. It's washed out, trades 11 times earnings, high quality stock, generally pretty predictable, 5% dividend yield, off their high in a major way, so it's very undervalued. The fundamentals are starting to turn. So they reported last week. They got the expectations right for 2024. Looks like they're beatable. And their volumes will start to turn positive as we go through the year. So back half of 2024, we see positive trends on very easy comparisons. So positive volume trends, and then next year to see really nice earnings growth from there as well. So we kind of expect that this is a company that can appreciate maybe 10% per year, plus that 5% dividend yield gives you a very attractive total return. This is something you want to put in a conservative portfolio. Now, Walgreens, we mentioned this before as well. This is a dog with fleas, nasty fleas, right? New CEO comes in and is turning things around. This is exciting. So this company only trades for 7.5 times earnings. Last week when they reported earnings, they were fine. They actually were kind of good. And they cut their dividend yield. The stock went down quite a bit. That was a nice little buying opportunity. So they cut their dividend yield. It now yields 4%, down from 7.5. That's fine. We think about this. So Amazon wants to be in this space. They want to be there badly. They just haven't found the right scenario. If you think about Amazon stock, so it trades at roughly 50 times earnings. They could buy Walgreens at 20 times earnings, right? Stock trades at 7.5. They could buy at 20. It'd be very accretive. It would get them into the market that they desperately need for another leg of growth. The big banks report on Friday. The stocks are up like all the stocks in the markets at this point, or a lot of the stocks. So they report on Friday. The big banks, we think that they're set to maybe disappoint in terms of bringing expectations down for 2024, maybe higher credit losses, slower economy. They need to get the expectations right. We don't think they're off by much, but the stocks are up. So there's a little bit of risk in the stocks at this point. So now we wanted to show you our market in a minute report. This is something that you can get for free. You go to my website, Patrick Adams CFA, and send us a message that you'd like to sign up for it. There's a little tab there and everything. So get the market in a minute hard copy. There's a lot more information there than what we talk about. I want to show you kind of what we're looking at. So the NASDAQ, it bounced nicely on Monday, but as of Friday was down roughly 3.3% year to date. And then the technology sector was off even more. The technology sector was off approximately 4.1%. So, and in the healthcare space, it was up 2%. So that's roughly a 6% relative swing. So you can see some of the momentum occurring here. We'll have to watch the trend in January to see if it plays out. But usually what leads in January, what leads for the rest of the year. Look at energy up a little bit too. We've been looking at that sector. The financials up, but utilities up. So it's a little bit more defensive spin. Healthcare does not have the economic cyclical issues like they have in a lot of technology companies. So we think that this is a really good space to own as the year plays out. So that's our market in a minute report. Oh, there's one more thing I want to show you. So here are some of the returns of some of the strategies that I manage. So this tactical growth, amazing returns, almost 20% annualized returns. And then our emerging healthcare, This small cap biotech, almost 58% annualized return since inception. So we've got some strategies that can make you really rich. And then we have strategies that are very conservative, give you a nice predictable rate of return, like tactical total return, almost an 8% return with very little volatility, as well as our tactical core, almost a 10% return there with very little volatility. Thank you very much. Again, come to my website, Patrick MCFA, sign up for the hard copy of Market in a Minute. We think healthcare is going to be a big mover this year. It's gotten a lot of attention. The obesity space will be in focus by a lot of investors, and we think it's going to be a big driver of the group going forward for the next numerous years. Take care.